Good afternoon, viewers. My name is Imran. I'm a UK and international tax specialist. Today, I'm here with another interesting video. So, in this video, I will explain to you the income tax implication of company car and fuel benefits with example and an illustration, which will make it very easy for you to understand this topic. So, stay with me. Car and fuel benefit. This topic is highly tested in ACCA, ACA exam. One of the most common benefit offered by employer to their employee is the provision of car and fuel for private usage. Remember, in exam, you will definitely have, like for example, the car will have private usage, so therefore you need to work it out. However, in the real life, if someone asks you that, if an employer asks you that we have provided car to their employee and there's no private usage, so what are the income tax and national insurance implications? Simply, there's no income tax and national insurance implication if the car is given for the reason of employment and there is no private usage. So the answer is very simple. So how to define a car? It is defined as mechanically propelled vehicle, commonly used as a private vehicle, and is not suitable for carrying weight load. According to that is definition from the capital allowances, and this definition is similar for the purpose of determining benefit in kind on company car. The following are not included in this list. So motorcycle and van. So van suited for carrying load. A pickup truck, a double cab pickup with the payload of 1 ton or more is accepted as van. There was a question in CTA exam. So the examiner said, okay, there's a double cab pickup given to employee or some engineer with a payload like this, and most of the students wasted their time trying to work out, the percentage for the car and the fuel, and they obviously losing marks. Obviously, in professional exams, you do not have that much time, so it's better to remember the definition of the car. So what the car is, so in case a examiner gives to you that there's a car and there's also a pickup truck with the payload of load that much, so you need to know whether this pickup truck considered to be a car or a van. Now, the starting point is calculating car benefit is the price. The first thing is when it is the first register. So that is the price you need to take when it was brand new, not necessarily the same as the price actually paid. For example, if examiners state that the company or examiner on the real world as well, if your employer asks you this question, that the car price when first registered, a brand new was 40,000 and the company paid 36,000, for your calculation purpose, you need to take that 40,000. So if there are any delivery charges and other applicable taxes, include those too. To this price, we need to add any accessory costing more than £100. But for example, some accessory, if it's costing less than 100, ignore. But do not include those accessories necessarily provided to use in the employee duty. For example, if you're working as if you're given a pickup to recover cars like from the road, so there's a, if they give you a tow bar, so that is, you don't need to add this because it's necessary for employment duty. Without this, it's not possible for you to work out duties in an efficient way. Also include equipment to, also exclude equipment to allow the car to run on the road. Fuel gas, hand-free operators to allow use of cell phone, and the equipment to enable a disabled employee to use the car. This knowledge is very powerful because if you remember an exam, if they give you all these small points, but if you know the rules and you know if you have the knowledge, you can easily say, okay, we do not include this, we do not include this. So you have to remember this. So the list price when new plus accessory minus contribution. If employee is required to make capital contribution to the price of the car, so the maximum they are allowed is 5,000. In case if employee has a contribution of 7,000, still we will consider only 5,000. So this will give you a revised price. Further points to remember: deduct any capital contribution by employee, as we said in the previous slide. The maximum deduction for capital contribution from the list price is 5,000. Therefore, if an employee makes a capital contribution of 2,000, the whole amount is deducted from the list price. However, if an employee makes capital contribution of 7,000, the price is reduced by 5,000 only. So that is the rules. Then the next step is to determine cash equivalent benefit on cars. So we work out the price first. So the price is multiplied by a certain percentage. So the relevant, so first you need to work out the price. So based on the information given to you in exam. So if when it was first registered, brand new, add any accessory minus any capital contribution. If the capital contribution is more than 5,000, restricted to 5,000. The second step is work out the relevant percentage. So for this to work out is, so you need to know whether the car was first registered on or after 6th of April 2020. The CO2 measurement is always in gram per kilometer. So where CO2 emission are 50 gram per kilometer or less, the car's electric range will be used. In exam, will be given to you. So based on electric range, if the range is big, so obviously if a car can, for example, per charge, they can travel 230 kilometers. So obviously there will be lower benefits. So it means that car is really good in terms of emission. Once the CO2 emission reach 75 gram per kilometer, a minimum relevant percentage in 2023 and 24 is 20%. This rate would be 19%, I think, for 2022 and 23. So the percentage will increase by 1 pound for each additional 5 gram per kilometer of CO2 emission, about 75 gram per kilometer. For example, if an exam they said to you a car with the CO2 emission of 100 gram per kilometer, so all you need to do is start with 20% plus the gap between 100 minus 75 divided by 5. So and then in this case the relevant percentage will be 25%. Here's example. CO2 emission figure are exact number. So for tax purpose, we are allowed to round down to the nearest 5 gram per kilometer. So the general formula that is used is emission, at the exam we will give you emission minus 75 divided by 5 plus 20%. So that is the rate for 2023 and 24. If the emission is 120, so all you need to do 120 minus 75 divided by 5 plus 20%, because the 20% is the starting rate above, so that is for 75 gram per kilometer. So anything goes above, make sure you find the difference divided by 5. Okay, that's how you can work out the relevant percentage. If the car with the CO2 emission 100 grams, so we deduct the baseline figure of 75, we divide the result by 5 and add it to minimum of 25%, sorry, 20%. Excuse me. The 4% supplement of diesel car, excluding those that met the real driving emission or the Euro 6 or RDE2 standard, not exceeding maximum of 37%. So what they're saying here is you need to add 4% supplement for the car diesel or the diesel car, but do not add this supplement for a car which meet the RDE2 or the Euro 6 standard. Remember, the maximum relevant percentage cannot be more than 37%. Okay. Additional 2% when the car is first registered before 6th of April 2020. Here is example. A car and with the RDE2, a Euro 6 car, was given to employee with a list price of 30,000 with accessory added of 2,000. The car was first registered on 6th of April 2021. This is registered after 6th of April 2020. So employee made one-off, that is a one-off contribution of 5,000. The car has CO2 emission of 100 grams. So the first thing is we need to work out the list price. The list price is, remember, when it was brand new 30,000 was first registered, and then add accessory minus capital contribution by employees, so that gives you a list price. Then you need to work out the relevant percentage. So the relevant percentage is, so the starting point is for 75 gram per kilometer is 25%. Then the gap between 100 and 75 and divide by 5. So if you do this, it's going to give you 25%. So the benefit on car, benefit in kind, BIK stands for benefit in kind on car is, so 25% multiplied by the list price, that equal to that much. So although car is diesel, but because it's Euro 6 car, hence no additional 4% supplement. So watch the information, what the examiner asking, make sure, or if your employer asking you a question, make sure you know the basic rules. Dealing with the non-availability of car. So in some cases, maybe the car was not available for the entire financial year. So the benefit is reduced if the car was not available throughout the whole of the tax year. So UK tax year runs from 6th of April to the 5th of April the following year. So an employee joined or left halfway through. So that sometimes some employee might join in 1st of September. So then you have to proportionately reduce the car benefit. So apportionment is done on monthly basis by deducting those months in which the employee did not have a use of the car. If the car is being repaired, sometimes a car breaks down. So non-availability deduction can only be made if the car has been off the road for at least 30 days. If the car was off the road for 20 days, you will still count this month. It has to be off the road for minimum 30 days to remove that month from your computation. Sometimes you need to share a car with another employee. So the benefit also reduced if the car is available for private use and used by more than one employee. If this is the case, the benefit will be calculated separately for each employee but reduced on just and reasonable basis. Contribution by employee for private use. So remember, one contribution was towards the cost of the car or toward the price of the car. If the employee is required to contribute towards the private usage of the car and does so, this contribution reduces the taxable car benefit. However, the payment must be specifically for the private use of the car. If the contribution is toward a specific aspect such as insurance or enable an employee to have a better car, then the payment will not be deductible. More than one car. Sometimes, if an employee was given a Mercedes in the beginning of the financial year, but later on that changed to BMW, so if an employee had one car for himself, or sometimes an employee was given director, most of the director, to themselves or to their wife or their children as well. So if an employee had one car for himself and the second car for his family member, in this case, employee simply has two benefits. So if the car has been provided to a manager wife, then the benefit is charged on the manager. So if an employee has a BMW car in the beginning of the year and later was given a different car, then you need to calculate the benefit for each car based on their price and the relevant CO2 emission and the availability of each year uh, as we explained in the previous slides. So for example, you need to work out for BMW and then see how long this BMW was available for how many months. Then you pick up the Mercedes and then find out the price of the Mercedes, add for example the list price when it was brand new, add any accessory minus capital contribution, deduct any contribution made for the private usage of the car by employee, and then see for how many months it was available. Dealing with a pool car. What is a pool car? No benefit employee has incidental private use of a pool car. Mainly, for example, for security companies or facility management companies, so or some company, for example, gas and electricity providers. So they will have one car is taken by one engineer and then is used by another engineer. So that is a pool car. So the pool car is the one essentially shared which is mainly used for business purpose. Pool car is not normally kept overnight at the employee residence. There's no taxable benefit when emergency service vehicle used by fire, police, or ambulance worker are taken home when on call. For example, if a policeman was on call and then around 2 o'clock, 3 o'clock, he finished his duty and took this car home, okay, so there will be no taxable benefit. So this is allowed. Apart from, for example, we deal with the car benefit itself based on the price and the CO2 emission. So that is if the car was for private usage. If in addition to the car, employee has the private usage for fuel, for example, and the employer provide fuel as well. So obviously, then this will have a separate benefit. So a separate benefit will arise if employee is provided with the fuel for private motoring. So for 2023, the fuel benefit base figure is 27,000. So with this base figure, you multiply this CO2, the percentage charge you calculated for the car. So appropriate percentage is the same percentage that is used for the purpose of calculating the car benefit. So no fuel benefit will arise if the employee reimburses the whole of expenses related to fuel for private usage. If the employee only make a partial reimbursement, this will have no effect. So it means you have to reimburse the entire fuel cost, or if you do partial payment, this will not help. You will be still taxed on the basis of the base figure 27,800 multiplied by a relevant percentage. The relevant percentage is the same we worked out on the previous slides. So it will be based on the car CO2 emission. Now, one, if an employee has given up one with unrestricted private usage, a taxable benefit will arise. No benefit will arise if the private use is insignificant. For example, what's insignificant mean is if an employee has a child studying in that school, if that employee drop him while on his way to work, so that is not significant. However, if the employee keep using this van to go to nightclub or go somewhere else to visit his auntie, yeah, if it's just incidental, it's okay. However, on regular basis, this will result in a tax charge. So we do not use the company car rule to calculate the benefit of the van. So a van with unrestricted private use, so the flat rate is 3,960, and then the van fuel benefit charge is 757. Thanks for watching. Some of the things are very complicated, but in summary, so work out the price first and then the relevant percentage based on the CO2 emission. So that would be the car benefit. However, then if examiners say there's a provision of fuel, so there's a flat rate for the fuel and then multiplied by this relevant percentage, the one you calculate for the car, so then just add them up. Also remember if the car was available for the entire financial year. Also remember if there's another car given to their family member, still the employee will be subject to income tax. And also remember if the car was swapped for another car, there was exchange, and also pay attention to the pool cars. So if there are any tax due, this will be reported on P11D. So P11D is the form where we reported car benefit to the HMRC. So then once reported, the HMRC would know how much additional income you received because of the reason of the car. So they will be, they will ask you to pay additional tax, and the employer will pay any employer NI. I do have other videos on provision or transfer of asset, provision of living accommodation. I will be making more videos on tax related topics, financial reporting, financial management, performance management. This would help the student to pass the exam. Also, it's very useful because if you have the knowledge, as I say, knowledge is power, especially when it comes to tax. Your employer will keep asking you this question. So if you keep going to HMRC website and update your knowledge, this would help you. You will secure your job and then you can ask for a pay rise. If you like this video, you can subscribe to my channel. Thanks for watching. I'm wishing you a very good day.